Hello, this is case 3 standard lender cost in version 19. The process is we will do a original purchase order, receive, and then vendor bill, which is $500 on the receipt, which is $100 each times quantity 5. Vendor bill becomes $750, which is $150 each times 5. Again, this is just an example. We'll get a freight vendor bill, which is $50, and then we apply the lender cost, which is like equivalent to a stock move, which is equivalent to the receipt level, which is $50. Now, at this point, Odoo would average out each quantity, consider the lender cost. In this case, the unit cost become 160, not 150. Then we make a sale, delivery, and invoice. So let's start by doing a purchase. And we're buying 5 of them, 100 each, as a purchase order level. During the receive, we're only receiving the quantity. By validating the receive, our inventory report quantity get updated along with the value. You look at the value and remaining value, you can see that case 3, it is 500. Now, there is no journal entry impact at this moment, because this is what updated in version 19. When you receive, nothing happened, but inventory-wise, there's a quantity 5 for 500. A couple of days later, you got a vendor bill for 750. So then for that bill, you have to go back to find a particular purchase order, create a bill from there. You don't create a bill just from the accounting, because you have to link the bill with purchase order. Okay, by adding that, you have a bill, and then it is directly impact on inventory valuation account. You can do 150 here. Okay, confirm. Until then, take a look at the inventory. At the inventory report, you have it automatically update to 750. In accounting, you have a GL impact, which is also on inventory valuation account. It comes from the bill. Remember our product category, we select a perpetual at invoicing. That's why. So up till now, there is a accounting and inventory impact, which is here and here. Now create a freight, where we will start by creating a freight bill. So a freight bill is a service. There's no physical product involved. We're not going to a purchase. We're going to accounting app, vendor bills. It might be a separate vendor, which is separate from our vendor A, where we bought the components from. We might have a second vendor that we pay for the freight. And if you cannot select the product, simply add these menu items to enable the product, and you can choose freight. This is a service item, but because I set it as lender cost with the setup, so I use inventory valuation account rather than an expense account. Price, I'll just do $50, save. And by doing that, you can also create a lender cost, which is in here. A lender cost, which is an LC, applied to a stock move or on the product level. Because before you do that, before you validate anything, if you go back to your inventory and move analysis, you can still see that the product has not considered the freight, which is it does not increase the $50 until the stock move happen. So go back to your purchase, go back to your bill, and click on the lender cost. It will ask you which transfer to apply. Sorry, let me go back to my purchase, and I have to see this particular purchase order. That if there's so many products involved, it's these receipts that you apply, the lender cost will be split across different products, and you can define your lender cost split across by quantity or by weighted average or by weight. Let me quickly show you the product setup. There's a freight. in the purchase, so it's a freight as a service. So I choose as a service. In the purchase tab, I say it's a lender cost, and you can split by different method. Different method have a different calculation, of course. In my case, just by quantity. And also my purchase order have just 5 item. So the total lender cost is $50, would simply divide it by 5. So adding $10 each to increase the product cost of goods sold or value. So coming back to accounting bill, I'll click on lender cost, where this will be applied to my number 3 stock move. There's already a bill. The moment you click on validate, Odoo give you this STJ, which is inventory valuation entry. If you click into it, it is increasing the inventory valuation, sort of. But what it does, not on the journal entry impact, but on the inventory report impact. Now you can see the value changed from 750 to 800. So if you divide it by 5, individual cost of goods sold becomes 160. And luckily, because you haven't sell anything, you're only selling after you apply the landed cost. So the cost of goods sold kicks in. Now, if we start making a sale, we're selling it as a same price, sales price 250, and confirm. Now, of course, you deliver it. Again, same thing. When you deliver, there is an impact on the inventory report, move analysis. You see that there is a red line, which is decreasing on 160, and it does decrease 160 value. There is no impact on your accounting yet. It still shows 800 until you got the invoice. So hopefully you can define that process where every time you deliver items, you just create an invoice at the same day. Create and draft, confirm. The moment you confirm, you can see the journal item here. Be careful in version 19, it credits your inventory and debit the cost of goods sold. Only when this is a GL level, so you can see the balance sheet, it does decrease. On the profit and loss, it does reflect. Of course, you can change to the normal standard one. You can see there is a $160 impact, and this is your net profit. All right. I hope it makes sense. Thank you.